Today, Ramon Perron from our Market Intelligence and Buyer Coverage team is going to be presenting. Ramon will be presenting for about 20 minutes, followed by a Q&A. You can post any questions that you have using the control panel on the right-hand side of the screen. You'll find the questions box towards the bottom. But with no further ado, over to you, please, Ramon.
Thanks, Paula. So my name is Ramon Perron. I'm an Associate Director in the Market Intelligence and Buyer Coverage team in Equitech's New York office. So a bit of background on myself. Before joining Equitech, I worked with Macquarie Group's corporate finance business based in London and was also a founding member of PwC's global corporate development team focused on consulting M&A advisory for the network. So today's webinar will be covering the IT Services M&A report, which is part of a series of 5 segmental analyses that we cover with respect to each of Equitech's sector specialisms: management consulting, IT services, media agencies, engineering consulting, and human resources. And we're pleased to say that this year marks our 10th anniversary of the report. Now, the IT Services M&A report is focused on firms working across IT strategy, architecture, implementation, and technology support services. So the webinar will look at this report, discuss an overview of M&A activity, typical deal sizes in the industry, regional variations, equity market developments, valuations, and finally buyer trends. So with that background and context, let's jump in and take a look at the findings from the report. So 2016 was an excellent year for IT services M&A. Volumes rose by 9% over the year, and although median deal sizes fell by 46%, overall transaction values were up over the year, supported by a number of mega deals in the industry, which we'll discuss a little bit later. Overall, M&A activity is now at a 10-year high for the industry. Now, this strong activity and deal flow for IT services has been against a backdrop of slower global economic growth over 2016. So according to the IMF's World Economic Outlook, global GDP was estimated at being at its slowest level since the last financial crisis. And of course, we also had the backdrop of an unsettled political environment with the UK's vote to Brexit and the US presidential elections. And despite that backdrop of slow economic growth and political volatility, there was exceptionally strong M&A activity for the industry. And what we found was that there was particularly strong deal flow amongst larger legacy players, and that were being disrupted by this increased adoption of cloud computing solutions across industries. And that disruption is leading to a lot of reorganization and streamlining amongst legacy technology players. And that was evident by a lot of the larger deals that we saw across the industry in 2016, most notably from NTT's acquisition of Perosystems from Dell, which was part of a reorganization by Dell so that they could buy EMC, which was a record deal for the technology industry broadly. Now, as I mentioned, that disruption at these larger legacy players is being driven by the adoption of cloud solutions, and there is therefore a demand amongst legacy players focused on traditional on-premise implementations for the latest cloud services skills. And that was highlighted notably in the year by Wipro's acquisition of Aperio in the second half of 2016. Aperio was notable for its strong partnerships with Salesforce and Workday, and it was a business that was considered to be primed for a sale. After a raft of acquisitions across the industry, and most notably the acquisition of its rival Blue Wolf by IBM at the beginning of 2016. Now, with that, increased adoption of cloud computing, and also the rising concerns amongst executives and also the public sector with respect to cyber attacks, there has become an increasing focus on M&A in the cybersecurity consulting sector, and that was very evident in 2016. We saw a lot of M&A activity for cybersecurity solutions providers and consulting firms. Now, deal flow across the sector was also being supported by converging buyer demands. So as we can see on this slide, to the left, we've got a table which is ultimately a matrix of buyer demand. Across the top are all the buyer groups across the knowledge-intensive services sector, broken down into each of the 5 industries that we cover. And across the left, each row highlights what industries those target companies buyers are acquiring fall into. So ultimately, the darker reds are showing where buyer groups are acquiring proportionately higher outside of their core sector into one of those target industries. So we can see a lot of darker shades of red for IT services buyers acquiring into management consulting and media agencies. And flipping that around, a lot of demand amongst management consultants and media agencies for IT services firms. So a lot of convergence at that intersection of media, IT, and management consulting. There is also, reasonably darker shades of red amongst engineering consulting buyers and HR buyers that are acquiring into IT services. Really a reflection of this pervasive impact of technological change across various industries, which is driving a lot of this convergence across the sector. Now, moving on to average transaction sizes, we had a look at the average deal size across IT services and found that it rose over the year to $121 million. Now, that was driven by some of those milestone deals like Pero Systems that we discussed earlier. But the median deal size was significantly smaller. It was under $7 million. And as we can see by this bar chart, there is a substantial amount of deal activity at that smaller size ranges. 45%, as we can see here, of deals are below $5 million in size, really highlighting quite a fragmented industry for M&A. Now, I think one of the key messages from this graph is that there is a lot of deal flow at those smaller sizes and a lot of opportunities for bolt-on acquisitions amongst private equity investors and smaller and mid-market consulting firms that are looking to bolt on niche capabilities that are smaller in size. What we typically see is that those smaller deals are consolidated through team grabs or smaller mergers with usually limited cash involved. Most of that cash consideration is typically paid as we start to approach $10 million and up in deal size. Now, flipping on to regional trends, we did quite a bit of analysis in our report on regional variations in M&A activity in the IT services industry. And as we can see from the map, over 80% of deals were focused on North America and Europe. And that was followed by almost 15% of deals occurring in the Asia Pacific and Australasia. As you can see, deal volumes in North America declined, and that was largely due to slower activity in the second and third quarter of the year preceding the presidential elections. But it was followed by a recovery in activity in the final quarter after the election results were announced. In Europe, despite some of the political volatility that arose from the UK's Brexit vote, M&A volumes in the UK and also the rest of Europe was strong. In the Asia Pacific, there was also overall strong performance, but the number of deals that was closed in Australia fell. However, there was a substantial increase in the size of transaction in Australia, indicating that buyers are acquiring less there, but they are acquiring larger deals as the market there is maturing. Now, looking at global deal trends, what we can see is that cross-border deal activity is pretty strong in the IT services industry. So in 2016, we found that cross-border deal activity accounted for almost 30% of all deals, and that was up from 23% in 2015. And that really demonstrates the importance of, global, incorporating those global consulting buyers into any sale process that you're looking to undertake, given that they are a substantial part of M&A in this industry. Now, flipping over to the next slide, we also undertook an analysis of equity market trends through our proprietary index, the Equitech IT Consulting Index. Now, that ended the year up 9%, slightly underperforming the S&P, but ending the year on a comfortable 10-year high. So a lot of strong investor confidence in the industry from an equity market perspective, really mirroring a lot of the investor confidence that we're also seeing from a transaction perspective. The performance of the index was supported by notable increases in the share prices of a number of listed IT services players, notably GFI Informatique, Devoteam, and Computer Sciences Corporation, all achieving strong gains in their share prices over the year. As we flip over to valuation multiples for M&A transactions, we can see that M&A valuations remain pretty robust over the last few years. And in 2016, the average last full year revenue multiple for a deal was 1.1 times revenue. And the average last full year EBITDA multiple was 8 times. So reasonably strong metrics over the year. But it should be noted that those figures are reported, unadjusted historic metrics, and they do vary considerably between transactions. So they should really be treated with caution and ultimately applied, applied to your own business with caution, and also really used as a guide, given that they are reported and unadjusted in nature. Now, flipping over to the next slide and comparing those valuation multiples on deals with listed players, we can see that those listed IT consultants have achieved strong growth in their valuation metrics over the last 4 years. And this year, the average valuation metric with respect to a listed IT player from a revenue multiple perspective was 0.9 times, and from an EBITDA perspective was 10.3 times. So from an earnings perspective, there is a premium here with respect to the EBITDA metric that a listed player has with respect to its quoted valuation metric in comparison to some of those average metrics that are being paid on M&A transactions in the industry. And that really enables those listed IT players to make earnings accretive acquisitions by paying a discount to their premium valuation metrics. And that, combined with a lot of rising unused cash balances amongst IT players and their search for new avenues of growth as they're looking to continue to achieve these strong increases in share prices, is really increasing a lot of the competition and also the pricing of assets that we're seeing from this buyer group in the market. And as we flip to the next slide and have a look at the top serial buyers in the industry, those buyers that have made multiple acquisitions over the last few years, we can see that they're responsible for 35% of all deals in 2016 in the IT services industry. And that's down from 39% in 2015, but still accounts for a substantial proportion of deal flow in the sector. And really mirroring the message on the last slide, we can see at the bottom here, a lot of those top buyers are dominated by listed players. So GFI, Informatique, J2 Global, Accenture, NTT, all top strategic buyers over 2016, and also achieving strong increases in their own share prices. Accenture continues to be the most acquisitive buyer within the IT services sector, and it's been particularly focused on acquiring niche capabilities related to disruptive technologies, while also broadening its own capabilities into areas like strategy and also into advertising and media, really exemplifying some of those convergence trends that we discussed earlier. They acquired a number of businesses in cloud services, really focused on established cloud ecosystems like Salesforce and Workday. And also made a couple of cybersecurity acquisitions. They acquired a business called Redcore in Australia and an Israeli cybersecurity business called Maglam. NTT Data, also aggressively acquiring technology businesses across the globe. And we mentioned earlier that they acquired Pero Systems, which was their landmark deal in 2016. But they also made a number of smaller niche acquisitions. Most notably, they acquired Nephos, which is one of the leading Salesforce consulting partners based in Germany. Now, the other notably acquisitive buyer group outside of the listed strategic players is the accounting networks. We've got Deloitte here, and as we flip to the next slide, we see that across the knowledge-intensive services sector, Deloitte remains particularly acquisitive, although its deal flow has slowed over 2016 as compared to the last 5 years. Another one of its competitors that's also acquisitive in the IT services sector is PwC. They made a number of acquisitions over the last year, but they did slow their deal flow in the US. And that's been a trend that has been notable since their acquisition of Booz & Co in 2014. In contrast to the Big Four and some of that slowdown in M&A activity, particularly in developed markets like the US, BDO has really upped its M&A activity, and it made 7 consulting acquisitions over 2016. In the US alone, and it also mirrored that activity across its global network, acquiring areas like traditional IT consulting and also cybersecurity. Moving on to the next slide and having a look at private equity activity in the industry, we've discussed in some of our earlier thought leadership how private equity are highly acquisitive in the IT services sector. Particularly in our buyer research that we published at the end of last year, we really discussed how private equity can be a flexible solution for an owner of a consulting firm to either achieve a full exit of their business or a partial value realization, which really can give other options outside of just a full sale to a strategic buyer. And as we can see here from our M&A reports, across the consulting sector, private equity accounted for a substantial amount of deal activity. And in the IT services sector alone, they accounted for 6% of all deals. And that was up substantially from 2015, where they accounted for 4.6% of all deals. Now, that strong activity from private equity was despite some of that competitive pressure that they'll be facing from those listed strategic buyers and also accounting networks that are increasingly acquiring into the industry. So private equity involvement was very healthy and strong this year. And as we can see from the graph, looking back at the last 10 years, private equity involvement has been strong and has been rising at those larger deal sizes. So what this graph is really showing is that as we look at deal sizes above $10 million, the proportion of activity that involves private equity increases substantially. And at those higher levels, over the last year, we've seen a lot of milestone deals in the IT services sector involving private equity. Most notably, Optiv was acquired by KKR last year, and Blackstone, which previously owned Optiv Security, divested Pactera to H&A Group. Both those deals were considered to be successful landmark transactions in the industry, and we expect that that will have a reaffirming effect on private equity interest in the space over the next 12 months. So just wrapping up and in conclusion, 2016 was a strong year for deal flow in the industry, and we're seeing a lot of that momentum carry through into 2017. The adoption of cloud-based solutions, cybersecurity being an important investment priority for executives, and those convergence trends that we discussed are expected to underpin a lot of M&A activity over the next 12 months. So that really gives those owners of sale-ready businesses in the industry lots of options as they're considering an exit of their business over the next 12 months or further along the line. So that concludes our presentation for today, and with that I'll hand over to Paula for some Q&A.
Thank you very much, Ramon. I appreciate that. And thank you for everyone who has submitted questions. We've got a few for you, Ramon. I hope you've got time to be able to answer them all. The first one is from a gentleman that says, my business is currently generating over $5 million of revenue. I'm interested in private equity investment. Do you have any suggestions on how best to approach this?
Right, okay, yep. So, as part of our buyer survey that we did last year over summer, we got a lot of feedback from the buyer community, and particularly from private equity, about what they're looking for in consulting acquisitions. And we did segment that, across all of our industries, and we got some very focused results on the IT services sector. A lot of the feedback that we got from private equity is that they are looking for businesses in the IT services sector that are ideally backed by unique IP. And particularly, that IP that they're looking for is really unique pieces of software and unique methodologies and tools, which is really enhancing the service offering that they're providing. And also reducing a lot of that risk that private equity sometimes look to assess with respect to key man dependencies. Now, the only issue I've got just with this example is the fact that, given the business is generating only $5 million of revenue, a lot of the results that we got from our M&A report this year really shows that private equity are looking for those larger transactions, ideally above $10 million in size. So I think with this example, I would advise that, if you're looking for a private equity investment, really as a standalone investment, then it would be better advised to, grow your business, get it to $10 million and above, and really focus on developing that intellectual property, particularly around any software or tools that you can develop that will really put you in a better stead for positioning your business with a financial buyer.
Thanks, Ramon. The second question comes from a US-based business owner, and they're asking that you talked about the shift toward cloud-based solutions, but this person's firm offers on-premise implementation services. Will they struggle to sell their business?
Yeah, I think that's a good question. So, this presentation has really focused a lot around cloud-based services, and that's really where we are seeing most of the growth and a lot of the premium valuations in the industry. But that's notwithstanding the fact that there is still a substantial amount of activity in on-premise traditional implementations, and that was evidenced by deal flow over the last year. And we cover in the back of our report a lot of the comparable transactions that did occur across the industry. And as you can see from that, there was a lot of activity in on-premise traditional implementations. So I think if you've got a unique IT consulting business that is focused on that segment of the market, and where it has a strong position underpinned by good clients, any unique IP, then you will be able to get strong demand in the market, even if it's not at the same level and with the same valuation expectations of some of those cutting-edge cloud services players.
Thanks, Ramon. I'm going to try and squeeze in one quick question, so if you wouldn't mind giving a very brief answer, I'd appreciate it. This person asks, I own a US-based cybersecurity firm that was recently approached by an accounting buyer. You mentioned Big Four deal volumes are declining over the last few years. Is this likely to impact the valuation I would get from a buyer?
Yeah, okay, that's a good question. So we did cover accounting buyers looking at the industry as part of our M&A report, and I think one of the key pieces really to stress is that they have slowed down their activity. Particularly we mentioned PwC and Deloitte in the US having slowed down their activity, but it hasn't stopped. They are still selectively making acquisitions, and where they're making those acquisitions, we would expect that valuations will be competitive for those deals that they see a good strategic rationale and a good synergy case. So I think business which is in a hot space like cybersecurity, we would expect that you would get still a sensible offer from an accounting buyer that was looking at an opportunity in that space. But if you want to what we typically advise is that if you want to, get the best price and the best value realization for your business, it is always best to test that opportunity with buyers across the market. And I hope this this webinar we covered a lot on buyer trends, and really did highlight the fact that there is a lot of different buyers out there that are interested in hot areas like cybersecurity. So to really test who the appropriate buyer might be for your business, going out to maybe some of those buyers in some of those adjacent industries that are acquiring into IT services, or testing your opportunity with a private equity firm might be the best bet for ensuring that you're getting the best offer from that accounting buyer.
Thank you very much, Ramon. If you posed a question which we didn't have time to answer, then Ramon will get back to you after the event. And if you're interested in talking to us about preparing to sell or selling your business, then please contact me at paula.allerton@equitech.com. Finally, if you aren't already a member, then please do join our Equitech Edge Club. It's a free source of information for consulting firm owners who are looking to realise equity value in their business. You'll find expert guidance and unique research, guest articles, and a whole lot more, including a monthly newsletter. So thank you to Ramon for presenting today, and thank you to everyone for attending. A recording of this webinar will be available within 24 hours, and we will be sending you a link. Thank you very much, everyone.